All right, Nicholas, welcome. And give me some context here. What's your reaction when you see things like China heading into a possible Lehman moment here?
Well, I think it's a bit overdone. They had, 6.3% growth in the second quarter. And I think the economy is doing reasonably well. They have some difficulties coming out of the COVID recession, but there are a lot of positives here. Imports are growing much more strongly than they were a year ago, which suggests underlying demand is bigger than a lot of people are saying. People are talking about deflation, but if you strip out food prices, consumer price inflation in July was actually up at a substantially higher rate than in June. So a lot of the things that people are pointing to could develop, but I think at the moment it's premature to think that a Lehman moment is around the corner.
Yeah.
The bankrupt property company, they started defaulting on their bonds 2 years ago. This is old news. It's nothing new. They've had a significant property correction for more than 2 years now. It has slowed down the economy, but I don't think it's going to collapse the financial system.
Let me show. I always feel like the currency is a little bit of an objective judge or arbiter of this situation, and certainly in countries like Russia and Argentina, that's been especially true lately. But if we can show China's currency chart over maybe the past 15 years or so, what we're seeing today does look like an important move towards that trend. So there it is, 7.3. So we're not quite back to where we were in the mid-2000s. Obviously, that was a different story, but we're starting to break out of this recent range. And again, flip this around. That means it's weakening. They have to intervene there. They seem to be stepping up. If everything's better and fine, and as you're describing, wouldn't the currency be a little bit more calm right now?
Well, I think we need to get away from looking at the rate against the dollar. If you look against a basket of currencies, the RMB has not changed very much. So is this RMB weakness or is it dollar strength? I think it's mostly dollar strength, not RMB weakness. It's not. Their Chinese currency is not weakening on a trade-weighted basis.
So then if it's not weakening on a trade-weighted basis, is the argument that you're making that in 6 months' time we're going to look at this and say the deflation wasn't as bad as we feared, the imports were better than expected, the currency was magnified by U.S. dollar strength, and then those who last hour were saying that they wanted to, for instance, buy Alibaba because they think a major economic stimulus or relief package is coming? Well, based on what you're arguing, then we shouldn't expect anything like that to come down the pike.
I think a major stimulus is very unlikely. We've had a couple of modest interest rate cuts, but they're quite modest. China is sticking to the plan that they adopted back in 2017, and that was to try to slow the growth of debt. They became convinced that, as debt to GDP and from the corporate and private sector, the households and the government was, closing in on 300%. That was not a model that could be sustained, and they have slowed down the growth of credit quite substantially since then. Some of it's less lending to property, which has led to the property correction. But I think they have taken substantial steps to reduce financial risk in the system overall.
Finally, then, because it does relate back to some of the major holdings people have in companies like Alibaba and others, do you think the government's crackdown on those firms is largely over? And what do you think their plans are in terms of supporting either tacitly or explicitly their growth and their sort of earnings hopes for the next couple of years?
Well, I think they have in place now a more regularized, normalized regulatory environment. That was the original goal, although it was implemented in a very clumsy manner that had very high costs for Alibaba and other companies like them. But we're now seeing substantial recovery of earnings in those companies well into double digits, and I think that's likely to continue. I don't think they're going to return to the high level of profitability that they had in the totally unregulated period, in the pre-COVID period, but I think they will strengthen. They're already substantially stepping up their hiring. I think their investment plans will stabilize and increase, and that will be an additional source of growth going forward.
All right, Nicholas Lardy, glass half full. We needed that, I think, on this Friday. Appreciate your time today.